The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful, what is this, November 28th? It's got to be Hanukkah. I have to say that I grew up in the Midwest and in Hawaii, and neither places had a big Jewish contingent. So I'm not a whole versed on Hanukkah. But maybe someone will call in and enlighten me one day on it. Of course, if you can always call in at 877-927-6648 and talk about any kind of stocks you want to. But give me a call if you would. It's going to be kind of a little bit more relaxed day, as normally I spend a lot of time in preparation on things to talk about in the media. Mostly what I did this morning was lay in bed because I'm still getting over a really nasty cold. Steve Rhodes said he got it about the same time that I did, although I don't think we talked too much last week about it. But both started getting signs of it last Thursday night, and we were kind of talking just before the show. It's always the gift that keeps on giving. But I think I know the reason why I got mine, and that is because I sat under a miserable air conditioning vent during a children's movie Thursday night with my nephew and my niece and their children. And for some reason, we were at a friend of his house down in St. Pete, and the air conditioning was just blowing on me all night long. By the next day, I was in a full-fledged cold. You get down here and spend more than about 6 weeks. All that thick blood from up north turns awful thin. You can't really take it. I remember when I first moved down here in like '96. The first winter I saw it got to be about 45 or 50, and I saw people with those little furry jackets on that had fur all around the face, like you see up in Alaska. At the North Pole, where people are, up there for 6 months in a Quonset hut for some kind of scientific study. And I thought, wow, this has got to be a little bit different. But it doesn't take long to get acclimated to coming down here. I actually had to tell them to turn the air conditioning off today in the studio, lest I get even more of a cold. But anyway, I hope you are all doing well. Had a nice Thanksgiving. We're looking at a market that trying to make up its mind on what's going on. I think I know what's going on. That is, we've got a market that is now got greed and fear in it. We've got some decent volume already today, 2.15 billion shares. And, we're up about 5 points. Going to be another light volume day up. We've got this I think 1408, 1409, 1410 range. That's going to be significant resistance in the marketplace. Every day we find one more company. Today it was Costco coming out saying that we're going to be giving you, a little dividend early this year, so it won't go into next year's taxes, and you'll be a little bit better off. We could give it to you in January, but you'd be paying 5-7% more tax on it. We've got the whole fiscal cliff, which I think is I'm thinking today that there's a 95% chance we go over the cliff. And I think it mostly had to do with press releases and the talking points coming out yesterday. And I think everybody, at least on one side, would be just as happy to see us go over that fiscal cliff. And from their talking points, I don't want to make this too political, but I think that they'd just be happy if we went back to the tax levels of 2000. But, of course, even if we hit the fiscal cliff, the taxes will be higher. There's 4% higher taxes on any kind of unearned income. But you earn that money one time would be the argument on the opposite side. But we'll be talking about that, talking a lot more about stocks in general today. I wanted to look and see what we had. You know, volume not all that terrific, but I suspect we've got a game of chicken. And that game of chicken will probably go on closely, I think, through the 15th of December. And I think the tendency will be a lot of people to go ahead and cover their shorts, only to find out that when reality sets in and everybody knows that there's massive tax increases coming next year, they're going to race to the exit once again. I don't know exactly the date that will happen. It'll probably be news-driven. But right now, I think that there's less than 5% chance of that going on because yesterday at I guess you'd almost call it a campaign event with the unions, they basically said that we weren't going to touch any of the entitlements. If you don't touch the entitlements, there's absolutely no way that you can actually cut any of the massive growth in spending. And since no one's going to actually cut anything else out there, I think that we have a Mexican standoff. You know, I think that mostly it's setting up to put the blame on the House Republican Tea Party members. Hopefully, at least on the side of the Democrats, I think they would love to break the party in half. And this is probably, if you want to take a look at it as a very jaded position, this is probably the time to do it. You've got a opposition in disarray, and this is the time to break them. You can probably, you know, say that politicians should think a little bit more about the country, but they're mostly interested in power, and that's all politicians, not just one side or the other. We've got some stocks out there that are not doing well, and most of these are not new to being weak. MCP is off about 3.5%. The story on this is not over. It's just highly short. Same thing with Sears Holdings, as we've talked about. One of the living dead stocks out there. This thing has been bouncing around. Let's go ahead and take a look at that. SHLD. Same thing with RIM. We see these perennial stocks that are in hot water, down 2, 3, 4%, up 4 or 5%. A very big indication of a market that's too short to actually break, we'll say today, not in a few days. Normally, when everybody gives up on the short side, at least the quick buck artists give up on the short side, it's when those stocks actually crater. When the people that are in for a very short amount of time, because mostly these stories have already been told, and there isn't a whole lot new into this. You know, we saw Sears Holdings go up to $68 on November 6th. Been a non-stop move on the way down. Heavy volume, normally an exhaustion move that we saw on the 16th of November. Came in with monstrous 6.6 million shares. It's continued to move on down, and I think this can easily see that 2889 level from January 5th of 2012 retested fairly soon. Like as I said in my Walking Dead special from Halloween, these stocks are dead. They just don't know it yet. They kind of bounce around because of the massive, you know, if these things had about 5% short interest, they'd probably be out of business and off the stock market already. The only thing that keeps these things going is the insanely high short interest and people bouncing in and out of these things, changing the amount of available shares massively over time. But that $28 level is probably a good chance we're going and heading back to that. And I think you could probably say that one good surprise out of Christmas here, and it'd be down to that $28 level. What do we else have out there? Wanted to see. Monster Beverage, Molicon, Dell's off 1.5%, not a big deal. Netflix. Netflix is another one that's in FLX that was popped up. Of course, we've had a few gentlemen call in that have are been in the put side of this, now is about where you would think that it's pretty close to time to start pulling the trigger on Netflix. This thing's been going sideways for a few, 3-4 days out here. But they caught a lot of shorts on the wrong side. They were able to run them. And, basically you're going to see this thing go sideways. And at one point, it's just going to fail massively again. And my guess is this thing's headed right back down to the probably $57, $58 level at the base of where this was going. Looking at movies, things that people want to rent, and streaming, I think it's going to be very hard for Netflix to compete on the long term, and they're spending so much money overseas. I'm thinking that they're probably headed back long term back to $25. But there's a handful of movies that are probably worth watching. Most of them are not worth watching anymore, and more people are continuing to excuse me, to cancel their subscriptions. But we're coming off the worst summer for Hollywood in 10 years. We've got a handful of movies that are worth watching, probably between now and Christmas. And normally you'd have maybe 10 or 15 that might pique my interest. That we have such a few, just a handful, that actually are probably even worth watching, even on DVD. Looks like it's going to be tough. But I've been I go into the grocery store and look at Coinstar's Redbox and think, is there anything worth seeing in there? And I have to say, for about 6 weeks, I haven't seen one thing that I've wanted to rent, much less actually decided to rent and maybe take back a day later. Just doesn't seem like there's a whole lot out there. But this thing, was an engineered short squeeze. And we're probably going to see that thing right back down around that $58 level again. Seagate's off about 1%. Slowly, these drive companies are coming back to their standard 8 to 10% profit margins. They're still up in the 15s right now. But over time, they are going to continue to see those weaken. Probably not a bad short to hang on to for a while, especially with the what would you say, both Dell and HP having extensive issues in the marketplace. See, on the winner side of the NASDAQ, what do we have going on? Green Mountain Coffee Roasters came out with blowout earnings. What can you say? Company still has problems over time. We'll take a look at them when we come back. Costco, of course, up. They're coming out with their special dividend. RIM, up another 4%. Again, exact same thing as Sears Holdings, just highly short stocks that aren't dead yet.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we've got a little news. I guess I didn't cover it at the beginning. Microsoft came out with a little bit of news of what they've been selling. 40 million copies of Windows 8 so far. Which is not bad. It's about 10% what they expected to sell in the first 18 months of it being out. They think that there are going to be upwards of 400 to 450 million devices out there running Windows 8 in the next 18 months. A little bit of leakage also on how many Xboxes they sold. On Black Friday, that Friday itself, 750,000 Xboxes. Which probably doesn't sound like a lot in comparison to some things, but what a great Razer and Razer Blade market. Of course, you sell the games to go into it. They're adding all kinds of new updates and Skype, and it's going to be kind of the beachhead into the family room of most houses. But 7 years after it came out, they can still push it out. And, of course, the cost to actually manufacture the thing is a fraction of what it cost them when it first came out. So they're not losing nearly as bad as they used to. Xbox 720 is supposed to be shown middle of the summer and come out probably right around the September-October timeframe. Miserable cold. Sorry about that, folks. thought I'd gotten it all out of my system before I showed up here. Needed a little bit of a drink there. But, we're looking at some of these other stocks. Google came out today. They bought a ad targeting company. It's kind of Groupon-like. So they're going after that. But it's mostly food and beverages. So we're probably going to see a lot more ads on the front of Google or your search pages with that kind of stuff also. Coupons, directional ads. It'd be kind of interesting. I guess probably not a big change for what Google's making out there. We haven't looked at Google for a while, so let's take a look at them. And let's see what we have here. And, it's getting its nice little bounce. I still think it's the strongest of the bunch. It's like Apple has come right back to the resistance levels. She had the two huge heavy days down, which were October 18th and 19th. And those, pretty heavy volume for Google, 12.5 million shares. We're coming right up to those candles right now again today. I think this is a pretty good example when we look at stocks like Google. We look at Apple. These are coming right back into their heavy days of resistance levels. You've got back right into about 580, got up to 590, 42 on the 27th with light volume, but nothing in here that says people are really piling in other than just a good short covering rally in a lot of that. They're going to continue to suffer from deteriorating margins. And it's going to be hard for them to come back with anything. The latest I've seen on Apple TV still shows a launch earliest next spring and most likely next fall. So nothing on any new products coming out of Apple anytime soon, making me think that there's still some weakness out there. We talked about an ABC down on the S&P. I can't remember if I actually showed it, but I'm going to show it here today. It really breaks us up into a market that makes me think that 1270 is fairly available. I don't think we're going to roll over here one day. I think there's lots of time to set up your short positions and not get too ahead of this marketplace, because it's probably going to be a slow roll, and then one day we're going to wake up and find the news out that we're going to have massive tax increases for next year. Again, I'm on the bearish side of that. But, we're up 370. They'd like to probably take this market out here at the end of the year at 1,400. I just don't think it's going to be possible once everybody figures out that they can just blow out the stocks, keep their money now, and decide what to do later in the marketplace. But, 1,402 on the S&P. 2.25 billion shares just doesn't offer a lot in the way of a big signal. Pretty much news driven right at the moment, and the fact that we've got a highly short market. A lot of those shorts are gone, but I think a lot of people started shorting a little bit early today. I'm still looking for 1408 one more time. We'll be back after this commercial interruption. Give me a call, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Again, you can give me a call at 877-927-6648. We've got a market out here that's kind of bifurcated. People hoping to get a little bit of extra toys in their stocking if they just hang out, hold on to these stocks just a little bit longer. I feel that why some will make out just fine looks to me like a problem that might be very problematic for those staying to the party too long and too late. We've got a few stocks out here that are kind of bouncing. Let me go back and look at some other ones. But, I talked a little bit about Amazon getting $3 billion in, if I can actually type correctly. Kind of one of the weirdest stocks out here. Most likely because I tried to look up, and several other people in the media tried to look up, who was buying those $3 billion worth of Amazon bonds, and no one will actually fess up to it. But people are, for about 1% over what treasuries are selling for, they were willing to part with $3 billion worth of money for Amazon. I don't think Amazon was the company it was once, but actually a very interesting kind of market out here. Why do they need $3 billion? Who was willing to give them $3 billion at such a low rate? But it really looks like a lot of people are really starting to find places to hide their money in, are probably running out. The only thing I can figure out. I would have asked for probably a little bit more for a risky investment opposed to one guaranteed by the government. But still kind of tough out there to see what's going on. Let's take a quick look at Intel. Then we're going to look at some of the stocks surrounding Apple, see if we can get anything from that. Intel's, went through its and tested its big-time low from last year. Let's go back and look at that. Came awful close, actually. It still has about 7 cents, so we could get one more retrace out here. But the volume was higher. The September 6, 2011 low came in at 79 million shares. The April 4th, 2011 came in on 69 million shares. You had 95 million shares last week, which still suggests we have at least one more test of the lows back in here for Intel. So let me go ahead and let's see, get my scans up here and take a look at the Apple parts. Of course, ARMS Holdings is the strongest. Another big day for them today, making another big high out here. But volume has not been very heavy or strong since they took off on the 23rd of October. This would be one to watch because I have a feeling that it is coming back to that $30 level. $37 level would be kind of interesting. Nice bit of movement back here. But yeah, the about $30 level looks to probably come back to the breakout area and look interesting. Other stocks that are in the Apple supply chain, we've been talking about this long asymmetrical triangle that almost all these stocks have been making, and we've been waiting for a breakout one way or the other in these stocks, and we really haven't gotten anything yet. Avago Technologies is one of these doing these, but when we start watching it, you need to start looking at trend lines and making a point from the last major highs out here. I'll probably pull it up here a little bit better. But we're looking at a nice triangle formation coming out over many, many months, and all these stocks are doing it in the Apple supply chain. The first general movement on these is normally thought, once we get this far into one of these patterns, the first movement is generally thought of as a shakeout pattern and a fake out. So you'd like to see this thing bounce, if you're bullish, bounce real hard. If this thing could go down maybe to the $29 level over a period of a couple of days or one big move, that may be the shakeout you look for to get back into some of these in it. We've been looking at Micron Technologies. Still hard for them to make any decent money on memory. Probably selling more memory than any time in the past, but just too many people in that business, and it's hard to come back and make any money. They still have a huge untested low of October 4th of 2011, and that is $3.94. This stock could easily get back to it if I'm right on a call of probably seeing this market pull back. Another one that's got the same pattern we were looking at in Avago is OmniVision. These, lower highs and higher lows out here are really starting to get this thing into a congestion zone, and we're really not seeing any kind of movement out here. My guess on OmniVision would be that this does want to come back down to the $12 level once again. We've got a couple of these stocks that are making the good money. Qualcomm's another one in the same kind of asymmetrical pattern, just not as far along as maybe some of the other ones. But we've had a nice little move out here, reversal on that reversal day that really moved these stocks fairly far. But again, you really don't have a lot to hang your head on to one side over the other on most of these Apple stocks. They certainly don't look like they're ready to go back and run up and retest the highs, which is, I think, pretty much what I'm hearing most days out here on Apple. Let's see what we have here. Okay, there we go. And I'm looking for Apple AAPL. What we have there? 582. That 580 range was fairly good resistance. I suspect that resistance to probably hold unless we get some very good news, and I'm on the wrong side of the market on it, on Apple. But Skyworks Solutions, another one. Some people, I know a lot of people were calling in to get this thing. I just didn't see a lot in it, especially that high volume down day. I know we've had several people call in. I'm not exactly sure who was pushing this, if it was CNBC or maybe somebody else here at TFNN, but you've had two high volume down days and signs of weakness in Skyworks Solution. My thought was that this thing was probably going to get a little bounce, but you're going to get at least one more retest of that $19.21 low area. You've got about 10 million shares there. You want this thing to come back down and test that area on lighter volume, and I think you've got like two dojis in the last trading days out here. That's either a halfway move signal on the way up, or that is the signal to go ahead and sell and take your money on this one. But without a lot of movement out here today, I'm going to say we're looking at one more doji. That'd be the second doji in 3 days. And I'd love for this thing to come down and test that 1921 on lighter volume if you thought that you could get into that thing and thought that Apple was turning around. I just don't see it yet. Triquant Semiconductors, this is what I actually look for in a long-term pattern. We just need to go down and test the previous low at $3.97 one more time. That's the November 23rd, 2011 low. Had 6.1 million shares. You tested it with higher volume. Unfortunately, on October 26th at about 40 cents higher, 35 cents higher. That suggests you're going to at least get one more retest of that 430 and probably back down into that $4 level. And the energy, and what I like about my power law vector indicator is you see this pattern so much, which is a heavy move down on heavy volume from the March 28th high at 726 down to the May 3rd low of $4.56. Then you get exactly what you want. You want several up and down moves. You want the volume to actually start pulling out of this stock. It kind of started to, got some heavy volume in the last couple of days of that trend. Now you're starting to go sideways. Good indication that you're starting to see some interest in actually holding the stock, but I think it's going to need you to get at least down to the gap of $4.10 and $4.20. And if you could get into that just peak under $4 on lighter volume in that November 23rd level, this would be the first kind of decent setup for a long-term buy. And there are some out there, so we could see a big sell-off and find that a lot of these stocks actually have pretty much been sold out to the extent that they can be, and maybe these find the best support in a big sell-off, and of course no one wants to own them, the perfect time to buy them. Give me a call at 877-927-6648, 877-927-6648. Give me a ring, and I'll try to soldier on through the rest of the show here and take a look at a few other stocks out here. There's let me see if we've got anything else that I'm looking at here. I wanted to look at a few Dow stocks. I don't spend a lot of time at them, but they're, wanting to find if anything actually is moving fairly well. You've got a little bit of juice in HP today, up about 2.5%. But again, this is another one that's been, HPC, actually HPQ. Get the right symbol up there. But this is probably just a little bit of an oversold bounce in this market. It went right back up to the high volume down day where they really came out and said, hey, we've got to write off $8 billion or $10 billion. Hard to actually figure out what they're planning on writing off for this acquisition. And, of course, if you've been watching any of the financial TV shows, they like talking about this a lot. I think probably, a lot of that Who Shot John probably not going to make you a lot of money. One thing that will is paying attention to the movement of HP out here. And maybe, do you get a test of that low one more time at $11.35, and does that put in all the bad news in HP going forward for a while? I think you can make a good case that they've thrown everything in that they could possibly throw in HP, and very light volume testing, 11.35 out there may be the time to actually step in. What we haven't seen is this volume, that heavy gap day come up here. We've had 3 days with very light volume attacking that gap down. If you could keep that light volume back down to 11.35, we might see, actually one of the better buy setups that we could have out here for what was at one time a quality company. American Express up almost 2%, 1.8%. AXP, take a look at that. And another one that's not giving a lot of signals. I'm probably a little shy, other than I found some decent stocks to go short today. I actually thought we were going to bounce a little bit more, maybe a little higher into the end of the day. Let me go back here to my quotes. But a lot of these companies are not giving you a lot to hang your head on. Let me go here to 1 year. We've got these tight trading ranges. American Express is one of them. It's giving kind of a, if it closed a little bit higher here, it could give some a cloud covering, a nice cloud covering, actually a bullish engulfing, close lower, close higher than the last day out here. Maybe give you a short-term move out here, but we're seeing a lot of these financial stocks being fairly weak. BAC, this thing's starting to be kind of a nice little trader out here. Got down to just under $9.92 for expiration a week ago. Well, I guess it's a week ago on Friday for that expiration. Bounced up almost to $10. You had lighter volume. You had a actually decent sell signal yesterday on that stock and the reversal. Looks like it's going to probably come back into the 925, 930 range fairly quickly. Nice channel out here in these stocks, but certainly nothing that says that we're going to get back up to that $10.10 high for March 19th with 660 million shares. We're getting into that with half or even lower on this November 27th high. Just really good signal out here that you're pretty much out of juice with breaking above $10. A lot of sellers willing to jump out of the stock. And, of course, you've got some really big fish in this one, including Buffett that bought back at $6.25, $6.50. You may be willing to take $10 all day long if you're willing to buy above $10 on this. We're going to be back in just a few minutes. And you can give me a call in the meantime at 877-927-6648. That's 877-927-6648. And we still have plenty of time. One last segment to phone in and talk about your particular stock. We'll be back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Wanted to just make sure before the end of the day that we got into S&P and probably the ABC setup down in the marketplace. And, you know, you've got a fairly decent low down here in the S&P of the June 4th low at 1266.74. Right now, if this is the ABC setup, we're going to be very close to getting this done. And I think we're probably going to see a high in the market over the next couple of days. And I'm setting us up in the newsletter for that. We could still get, could you still see, 14.15, 14.20 in the S&P, maybe tomorrow and maybe the next day, maybe Friday, something on light volume. But, yeah, you could. So I think, you probably would think that if you're going to have a good setup here, anywhere between the 0.5 and 0.618 retracement up here is going to be, fairly good spot to pick your battle. That 1408 has continued to be fairly good resistance levels. We want to see about 4 to really start making me a little afraid of this market. I'm going to have to see more than about 4.2 billion shares a day. I'm going to have to see 5.5 billion shares, something like that. And, we've got 2.4 billion shares with an hour left to trade in the day. We're going to be hard-pressed to get 2.9 billion shares out of day unless we see some real action at the end of the day, maybe 3.1 billion. That's not what you want to see these highs being attacked at. But hopefully if you are not watching in the den or on Tiger TV, you at least take a look at this one chart, because this is about as good as it gets in setting up an ABC down, and also maybe what you can learn about the rule of alternation. If you're watching on Tiger TV or just looking at the S&P, you can look at this up, down, up, down, up, down. Probably, but you could almost say that there were 4 internal patterns from the high at 1474 on September 14th down to the low at the 1343 on November 16th. That's a very complex pattern, but for the most part, it was you were pretty much headed down all the way. You have about 3, 4, 5 days up straight with a little bit of movement, and that rule of alternation is normally if you have a real choppy market, then the counter move to that is going to be very straight, as we got, basically a fairly decent line if you're watching on the charts here. Normally, when you get out of that, you're going to get right back into that choppy market. So far, we've seen a little bit of that today, but very light volume so far in that 2.3, 2.4 billion share range, and we're really going to look and see what we find out later. Right now, the best looking pattern out here in this marketplace does suggest that we're going to at least try to retest that 1343 low of November 16th. My guess is that there will be no fiscal deal, and we're going to probably see this market continue to sell. I think everybody's expecting you're going to get it all at once. I think it's going to be much more than that. I think it's going to be a slow rollover, and you probably want to buy some time if you're getting into puts, especially late in this year. You're probably going to get kind of that meltdown into the end of the year. Almost always we see a melt up into the end of the year. But with VIXs and the implied volatilities continuing to drop every day, probably you can make a little money if you're wrong on and being long, or maybe have a less chance of getting your return short, but maybe a much larger return being on that short side. I just think I have to be on the short side now. Anyway, you have a great and safe day. We'll see you tomorrow.